Hello and welcome to the Finance Bill. In this video, we will give you a definitive answer to the age-old question, should I or should I not refinance? So stick around till the end of the video for your Finance Bill of the day. My name is Chakravarti and this is the Finance Bill. If you're looking for tips and hacks to improve your financial health, please consider subscribing to the Finance Bill. So, you have a mortgage and you've been thinking about refinancing to reduce the interest rate. You talk to your friends and given the low rates, some suggest you should refinance, while some say you shouldn't since you are many years into your current mortgage and have paid a ton of interest already. Then you talk to the banks and they strongly suggest you refinance because they want to help you lower your rate and your monthly payment. But when you hear the experts talk, they want you to consider a lot of other factors like refinance cost, break-even period, effects of extending your loan term, and a lot more. Some finance gurus might even show you a picture like this and tell you how most of your payment goes towards interest during the initial years of your loan. They warn you that the banks want more of those front-loaded interest, which is precisely why they want you to refinance, especially if you are well into your current mortgage term. Now, it sounds like what everyone is saying is true. Your friends, the bankers, the experts, and you're back why you started because of the conflicting opinions. Here's where we come in. What if we told you that it is almost always a good move to refinance? What if we told you you can have your answer by the end of this video? However, this information does not apply to a cash-out refinance. We're going to help you make an informed decision on refinancing your current fixed-rate mortgage to a new fixed-rate mortgage so you can save on interest. Now, let's go over a smart refinance calculator we've created just for you. It's on our blog and you can give it a spin after you've finished watching this video. The link is in the description below. We will now take you through this simple but very smart calculator and let's get right to it. Let's use this calculator for some simple and plain math to get the answer to your question, should I refinance or not? Start by filling the details of your current loan. Enter the original loan amount, and for this video, let's start with $300,000 as the loan amount. Enter the start date of your current loan, and in this example, let's use the 1st of February 2015 as the loan start date. Enter your loan term and the interest rate. We will use the most common 30-year term and use 3.5% as the interest rate, as this was the nation's average for a 30-year fixed-rate mortgage around Feb 2015. Now, the outstanding principal balance as of today is important. Obviously, the calculator does not know if you made any additional payments other than your monthly minimum payment. So if you did, choose the enter manually option and enter the outstanding principal balance on your current mortgage. You'll be able to find this on your latest mortgage statement. Depending on your lender, it may be called outstanding principal, principal balance, remaining principal balance, etc. If you've not made any additional payments, you can leave the default auto-calculate option and the calculator will populate the result for you. But we still recommend checking this against your latest mortgage statement. Once the current loan section of the calculator is done, move on to the new loan section. The calculator will simply copy the new loan amount from your outstanding principal balance from your current loan section. Remember, in this video, we are covering a simple refinance without any cash out. So you want the new loan amount to match or be as close as possible to your current loan's outstanding principal balance. If the new loan amount is lower, then you'll have to bring money to the table when closing. And if it's higher, then you're kind of rolling your refinance closing costs into your loan. So be watchful of this when you're shopping for refinancing. The calculator will assume the new loan start date as the first of the following month. In the new loan section, enter the loan term. We will use 30 years in this example. The interest rate you've been offered or expecting to be offered. We will use 3% in this example as that was the nation's average interest rate when this video was shot. Remember, rates change every day. On days that the market is volatile, it could even change more than once a day. So until you lock your rate, any offer you may get from your lender is subject to change. And if you have any closing costs involved in your refinancing, enter that as well. In our example, we'll use a closing cost of $2,500. Double check to make sure all the information is right, then just hit calculate. You're going to see a results table just like this. As you clearly see, if you keep your current loan and continue to just pay the monthly minimum payment of $1,347, your loan will end in January 2045 and you will end up paying over $393,000 in total. This total does not include what you've already paid and is only the total of the remaining payments you'll make if you keep your current loan. So we're going to focus only on the future payments to give you a clear comparison and help you decide if you should refinance or not. Let us focus on just these two columns for now. If you refinance, your monthly payment does drop down by almost $232, which is exactly the sales pitch you will hear from almost every loan officer out there. However, you will end up paying almost $402,000 in total, which is over $8,000 more in interest, which you wouldn't have paid if you had not refinanced at all. This is the reason why most of the experts ask you to stay away from refinancing, because banks entice you with offers of reduced monthly payments, but you end up paying more in interest over the long term. So, in spite of this information, which is very true, why do we at the Finance Bill recommend that you should almost always refinance? Think through this again. With this example, you've decided not to refinance, knowing that you will end up paying more in the long haul, even though your monthly payment is lower, right? But hang on. What if you refinance and continue to make your former monthly payment? If you decided not to refinance at all, you would still continue to make the higher monthly payment on your current loan anyway. So let's say you refinance your loan, but continue to make the same monthly payments as your previous loan. Does that change the game? This calculator will tell you exactly that. You will arrive at a golden number that will help you make a clear decision on refinancing. Let us now bring in the magical accelerated payment column. As you can see in the third column, if you refinance and continue to pay the exact same amount as your current loan, paying this difference of almost $232 as extra payment will go straight towards your principal and help you finish off your loan early and ultimately save on interest. In this example, you will have paid off your loan 21 months sooner and you would have made around $364,000 in total payments as opposed to paying over $393,000, which is over $29,000 in savings. If you want to cross-check these figures, below the results table, you can find the amortization schedule of your current loan, the new loan with regular payment, and the new loan with accelerated payment. This example illustrates a $265,000 loan balance that is refinanced after 5 years into loan payments, where the new refinanced interest rate is just 0.5% lower than the old rate. You might wonder, why should I refinance for just 0.5% reduction in interest rate? But as you can see in this example, the savings are more than $26,000 even after accounting for the $2,500 in closing costs. Imagine a scenario where this loan balance is much higher than this one. And what if the difference rate is 1% or more? According to the mortgage data firm Black Knight, a record of almost 20 million American homeowners could save money by refinancing. And as of July, more than 7 million Americans had a 30-year fixed rate mortgage at rates of 5% or higher. Imagine going from 5% interest rate to 3%. The savings could be huge. Feel free to use the calculator and see if refinancing makes real sense for you and your loan. And remember, if you refinance, you'll have to keep the loan and your home at least until you break even on the closing costs that you might pay while refinancing. So, here is something that most experts may not tell you. And this is our finance bill for you today. Refinance your mortgage and have the financial discipline to still continue to pay the same monthly payments as your current loan, though you're only obligated to pay a lower amount towards a new loan. It might be a tough pill to swallow, but it'll save you a ton of money. And if you can maintain the rigor, then this bill is tailor-made for you. If refinancing is so beneficial, why do we say it is almost always good to refinance and not just always good? Well, for obvious reasons like when today's interest rates are higher than that of your current rate. And in some cases, closing costs might play a role. If you landed here trying to arrive at a decision on whether or not you should refinance, then our calculator will make the decision for you. All you have to decide is if you're willing to take our special pill that could potentially save you thousands of dollars. And if you do decide to refinance, in our next video, we'll show you how to refinance your mortgage without any out-of-pocket closing costs. Maybe even make some money by refinancing? Now, head over to thefinancebill.com, give our unique calculator a spin, and make your refinancing decision an easy one. We promise you, you are in for a pleasant surprise. We hope you found this video under Finance Bill valuable. If you did, please like, comment, and share this video. Don't forget to subscribe for more financial tips and hacks, and make sure you hit the bell icon so you don't miss any of our future videos. Thanks for watching, and until next time, this was the Finance Bill. Cut thumbs. I blabbered a little.